Okay, everyone, today I'll be talking about Phantom and my prediction from $1 to 0.4. Okay, so the tweet that I wrote was here. You can see it in my Twitter account, Tradenalytics. Okay, so that's where I wrote the initial price target was around 0.5. Okay, then I revised it to 0.4. So this is the second tweet that I gave, some point around April 13 April this year. Okay, so I revised down to 0.4, and you can check out the revision. I believe is this one. Okay, so yeah, this is the revision, and I revised it to 0.4 with a possibility of it going down to 0.3. Okay, and I gave this tweet around 27 April this year. Okay, so I managed to predict the price crash from around $1. That's the range that I started to around 0.4. Yeah. Okay, so I wrote an article in my website, so you can check it out. Tradenalytics /community/blog, or you can go /blog and it will redirect you there. Okay, and you can see the article that I wrote. It is here, how to use lateral pitchforks to predict crashes. Okay, so in here I also showed a link towards the Twitter post. You can just click it and it will take you to the link. Okay, and I wrote an entire article on this. It's completely free, so you can read it out. It's a free article. Okay, so yeah, it's quite a long article and a lot of good knowledge here. So I'll just start with the chart right now. So in the chart, what I started was with a normal pitchfork. Okay, so as you know, if you're new here, I use pitchforks to trade crypto. Okay, that's my primary strategy. So right here, I draw a normal median. Okay, so a normal median, you can get it in TradingView over here. So just click it over here and you'll be shown as a pitchfork tool. Okay, so yeah, that's the pitchfork tool. Okay, that's a normal median, and you can draw the mod shift median. And what I call a mod shift median is actually a modified shift pitchfork. Okay, so yeah, you can draw that also. So the modified shift is right here, and you can draw from this pivot here, A, B, and C. Okay, and this is how you draw the lateral pitchfork. Okay, a lateral is where A is lower than the C pivot. Okay, so A, B, C. Okay, when the pivot is between, when A is between B and C, then you have a divergent. Okay, so this is a different kind of pitchfork. But in the situation we have here, it is called a lateral pitchfork. Okay, and this is the pattern that you can use to trade Phantom during April this year. Okay, so that's how I managed to predict the crash. So you can see when the price rose from pivot C to the median line, okay, and this white line here is the median line. When the price left pivot C, so you went up from here, okay, instead of touching the median line, it did not touch it, so you just reversed around this point, okay. So how do we know that this was a reversal point? Okay, there's a few reasons. The first reason is because if you were to draw a wave volume, FRVP, okay, so the FRVP indicator I believe is around here. Let me check. FRVP will be this one. Yeah, volume based fixed range volume profile. That's the indicator that I use. Okay, and I only draw it within one wave, and the wave is the AB wave. Okay, I explained it in my blog post written in my website. So the post would be the winning secrets of the volume profile indicator. You can read this up. Okay, and it's free to read. Yeah. So it basically explains my entire strategy of using the FRVP and the settings that I use. Right, you can just copy the settings into your TradingView. It's completely free to use. Yeah, so this is the FRVP of the AB wave. Okay, and I drew this right here, and you can see all the peaks of volumes. Okay, where the high volume regions are. Okay, I think I drew it wrongly. It is the BC wave. Okay, I correct myself. It's the BC wave. Okay, so yeah, the BC wave. So you can see that there is a very high volume region here. Okay, and another high volume region here. And you notice that the price rejected it very, very precisely. Okay, you can see it right here. And the precise rejection was a wick type. And if you were to look at the volume, okay, yeah, I would say that it's not significant volume, but the wick is very significant. Okay, and the rejection happened quite confidently right here of this volume region. Okay. Another thing to note is that the price was already very close to the lower parallel of this normal pitchfork. And if I would draw it from here, okay, now I'll delete this arrow. So the lower parallel of this normal median will be this red line here. Okay, and that's the lower parallel. You notice that the price is already very close to the lower parallel. Okay, in fact, before this week, it has been going up and down the lower parallel. And that's a very bearish sign. Okay, so that's an indication that price wouldn't even touch the median line here. Okay, so that's the first thing. The second thing is that the price didn't even touch the mod shift median. Okay, so when it went up to the mod shift median, which is this orange line here, the center line is called the median line of the mod shift median. Okay, so to revise again, the mod shift median is the modified shift pitchfork. Okay, so this is the one. And this is the line here, and the price didn't even interact with it. Okay, and that is also a very bearish indication. Okay, when the price moves from the pivot C over here, A, B, C. Okay, so I will draw it, C more clearer, right? If it moves from C to the median line and it doesn't even touch the median line, that is what we call a failure, price failure. Okay, price failure of the median. And what happens usually in a price failure is that the price goes back to the pivot C, okay, which is this one. Okay, so over here, if you were to see the price reject a significant volume region within the domain of the pitchfork, okay, the normal pitchfork. So we're talking about lower parallel here, and it's above the lower parallel, and it rejects a significant volume region, okay, it doesn't even touch the median line or the mod shift median, the chances of prices going back to pivot C is very high. And that's the primary reason why I was bearish at this point. Okay, and if you knew about this, you could have sold phantom right here, 0.93, and you have gotten the entire price move to at least 0.55. Okay, and if you're more advanced, you can actually catch the entire move down to 0.4 at least. Okay, and that's what I did in my second post in my Twitter. So you can check the Twitter post out. Yeah, so this is the one. Okay, so if you want to go even further, you can start to talk about the modified shift first warning line. Okay, so this is a modified shift. The first warning is this line, the dotted line here. Okay, so the median line is this. Median, this is the lower parallel of the mod shift median. And this is the first warning of the mod shift median. Okay, and quite commonly when you see this happen, a failure of the normal median and the mod shift median, you will very commonly see price go all the way down to the first warning. And this is the first warning here. So the problem with this is that you don't know exactly where the price would land on the warning. Okay, so it could do this, right? So the price target will be 0.35. It could do this, that will be 0.43, or you could do this, okay, where the price target is 0.72. So how do you know that the price would end up around here? Okay, and I will give you a tip, okay, and this tip is you draw a forward median. So you start from here, from the B pivot, okay, you go to the C pivot, and you go to the new pivot that's been created by this wick here, okay, and you notice that the median line goes this direction here, okay. So what happens is that prices would usually okay end up in this region here. You can draw right here, okay. So this will be the intersection of the median, the forward median. So this is what I call a forward median, okay, drawn from the BC pivot of the first median, forward median, and it goes to this level here, which intersects the warning line, okay, and the upper parallel which intersects the warning line. And usually prices end up around this price region. You can draw a box from this line here, 0.34 to 0.43, and prices has a very high chance of ending up in this box. Okay, so yeah, that's my video for today. If you really enjoyed it and you want to learn more, you just go to my website, create an account. It's completely free. Okay, and you could even look at my my product, which is the Scryer. So in this Scryer, right, it's quite interesting is that I actually add some of my indicators inside. I'll be adding more. So currently there's only one. Okay, so the current indicator is a volatility indicator. where it will predict where high volatility happens in the future. Okay, it really works very well with the 1 hour. So you can you know, try out this indicator. Yeah, I'll be adding more in the future. Yeah. So thanks for watching, and don't forget to subscribe my YouTube and my Twitter also, where all my updates are written in. Okay, you just check it out. Yeah, that's it for today. Thanks.